Ladies and gentlemen, good day and welcome to the Epack Durable Q1 FY25 results conference call hosted by JM Financial. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nikhil Kandoi. Thank you and over to you, sir.
Thanks, Sejal. Good morning all. On behalf of JM Financial Institutional Securities, I welcome you all to Epack Durable Q1 FY25 earnings conference call. Today we have with us management represented by Mr. Bajrang Bothra, Chairman and Whole-Time Director, Mr. Ajay Singhania, Managing Director and CEO, Mr. Sanjay Singhania, Whole-Time Director, and Mr. Rajesh Mittal, CFO. I would like to thank management for giving us the opportunity to host this call. Now, I would like to hand over the floor to management, post which we can open the floor for Q&A. Thank you and over to you, sir.
Thank you. I'm Bajrang Bothra and good morning, everybody. Welcome to our earnings conference call to discuss the performance of the first quarter of the financial year 2025. In the interest of some of the people who are new to the company, let me first start by giving a brief overview of the company. Epack Durable Limited is the second largest air-conditioned original design manufacturer in India in terms of number of indoor and outdoor units manufactured in fiscal 2023 through its ODM journey route. Our journey started in 2003 when we started as an OEM for RAC brands. Over the years, we have consistently grown by adding new customers, increasing our capacities and backward integration. The expertise of Epack Durable lies in manufacturing a diverse portfolio of room air conditioners in small domestic appliances which we call SDAs. We cater to all aspects of room air conditioners and SDA value chain, including extensive ODM and OEM service across our product line. We are a customer-centric company where business is driven by a focus on continuous innovation and operational efficiency. Epack Durable works jointly with customer team and customizes the product according to different client requirements. Our strong manufacturing and design capabilities, including developing, designing and manufacturing of room ACs of various designs and technical specifications. Further, the current RAC product offering enables the company to perform more customization to RAC brands in terms of completely built up units of ITUs and ODUs separately as well. Our integrated manufacturing facilities help us manage operational costs and logistics efficiently. In line with our focus on bringing in operational efficiency, our manufacturing operations involve a degree of automation which reduces the margin of error and manual inefficiencies. Our manufacturing facilities are strategically located to facilitate product transportation to customers across India. We have 3 manufacturing facilities, the first one in Dehradun, Uttarakhand, second in Bhiwadi, Rajasthan, and the recently operationalized facility at Sri City in Andhra Pradesh. We strongly believe in staying ahead of the curve and the key role that R&D plays in product development. We have 4 dedicated R&D centers and close to 70 plus employees in R&D team. Our R&D activities focus on development of new products, optimization of existing products, and manufacturing methods, process improvements, environmental protection and energy efficiency. With the help of our R&D, we have registered out 1 patent, filed a couple of them, and also have numerous design decisions in India. Due to this strong operational capability, Epack Durable today is one of the key ODMs for major brands in the country. We are also constantly expanding our product offerings in both room ACs and small domestic appliances and have also invested heavily in expanding our capacities and capabilities to cater to the growing demand. In terms of new product launches, we have already launched air coolers in January 2024 and we plan to launch fully automatic washing machines, room oil heaters, air fryers, tower fans, induction water heaters, and air dryers in the coming quarters. Apart from this, we have a highly experienced board of directors with 2 nominee directors from ICICI Venture Fund and Pharma Capital and other independent directors. Now, I will request our CFO, Mr. Rajesh Kumar Mittal, to brief you on the financial highlights, after which our MD and CEO, Mr. Ajay D.D. Singhania, will brief you on the key operational highlights. Thank you.
Thank you, sir. Very good morning, everyone, and welcome to the earnings call. Let me give you some of the key financial highlights for the first quarter of the financial year 2024-25. The revenue from operations stood at rupees 774 crore, which increased by 77% on year-on-year basis. The EBITDA was reported. I'm just repeating few words. The revenue from operations stood at INR 774 crore, which increased by 77% on year-on-year basis. The EBITDA was reported around 52 crores, which also increased by 77% on year-on-year, with the EBITDA margin reported at 6.68%, remaining flat on year-on-year basis. The net profit was rupees 23 crores as compared to rupees 9 crore in the first quarter of the previous financial year, which represents a significant increase of 169% on year-on-year. Profit after tax margin for the quarter stood at 3.02%. Now I would request our Managing Director cum CEO, Mr. Ajay D.D. Singhania, to brief you on the operational highlights. Please, sir.
Thank you, Rajesh. Good morning, everyone. I'm pleased to announce that our CCT facility is now fully operational across all product lines. This milestone marks a pivotal moment in our expansion efforts and reinforces our commitment to meeting the growing demands of our customers. It is also one of the main driving factors of the exceptional year-on-year growth during this quarter. Apart from the addition of new customers and introduction of new products, which bolstered the revenues as well, our product business remains a cornerstone of our success, contributing 98% of our total revenues in Q1 FY25, representing a robust growth of 77% year-over-year. The AC product revenue contributing 86% of our total product revenue and achieved an impressive year-on-year growth of 82%. Overall, it has been a very healthy and encouraging quarter, driven by a combination of market dynamics and our expansion plans. With this, we can now open the floor for QA session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aniruddha Joshi from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. Ajayji, congrats for a really great set of numbers as well as the acquisition. So just on the acquisition, if you can elaborate a bit more on the company that we plan to acquire. So as I understand now, it will be a 50% holding for Epack. So whether it will be first consolidated or it will continue to be accounted as a joint venture itself. Point one. Secondly, what is the profitability of this company? Because whatever data we could get, based on that, it is still in investment mode or in red till FY23. So how do we see the profitability in FY24, Q1 FY25, as well as going forward as well? And secondly, if you can elaborate a bit more on the business of the acquired company, the BLDC motor. So how do you see the market? And now post this, fans, do we cater to fan segment as well? And which are the key customers, etc. On that? Yeah, thanks.
Thank you, Andreas, and thanks. The company Epack, which is currently an associate of Epack Durable, wherein our current investment is 26%, and 74% is being held by RRWL, Ramratna Wires Limited. So going forward, the plan is to increase our equity from 26% to 50%, So this is a strategic investment for Epack Durable because Ipavo is a motor company which is in the business of manufacturing motors. The company was started 2.5 years ago with an intent to develop motors. So yes, you are right that currently the PAT and the margins of the company are not significant because the last 2.5 years were devoted to developing products. So in last 2.5 years, the products have been developed in a test and pilot setup, and now going forward, we are planning a greenfield manufacturing facility for this Ipavo, which is now currently under construction at Bhiwadi, very close to the Epack Durable's Bhiwadi facility. So the new facility will be operational by end of this year, so around November, and we will be ready for operations with mass production. So the good thing is all the products which were envisioned have now been developed, test marketed, and also pilot production has been done at our test facility, and supplies had commenced in last quarter. So we are now ready to get into a completely new setup with increased capacities and a mass production scale. So the market for this, yes, currently we are in the business of developing the BLDC motors in this particular company, Ipavo. But the product segments which have already been developed is the BLDC motors for air conditioners, the BLDC motors for ceiling fans, and also HVLS fans. So these are the three product segments which have been currently developed. And going forward, we also plan to get into the other motors, both the induction motors and universal motors, as well as the fractional horsepower motors. So the plan of the company is to really now scale up the operations and business in the next 3 to 4 years. So this would now become a 50-50 JV between both the groups, between Epack Durables and Ramratna Wires, RRWS, wherein the consolidated results, yes, there will not be any line-by-line consolidation and for either of us. It will be at the JV account only, yeah.
Okay, understood. So how is the management of this company? Means whether now with we getting 50% stake, it will be managed by Epack, or it will continue to have its own separate management, fully supported by the Ramratna Group as well as Epack, or how we should read that? And again, is there any cross sales from Ipavo to Epack or so?
Yeah. So the management will be a joint management, 50-50 equity, 50-50. So it's a joint management, equal management from both the sides. And yes, there will be professional management for day-to-day operations. That's on the management side. And so this company, Ipavo, especially for air conditioning motors, yes, Epack would be one of the customers. So there will be some related party transition to that extent. But yes, since this is a motor company especially, so we are open to sell. I mean, we will be catering to almost all the customers.
Okay. So, indicatively, Epack as % of sales of Ipavo would be any indicative number?
It is difficult to give numbers. See, our priority will be to serve the market first. So, but Epack, I mean, it's going to be an arm's length distance. So it will depend on the Epack's buying team, sourcing team, how they want to allocate the share between Ipavo and the other suppliers.
No. So I'm obviously means we will be focusing on external customers, but let's say FY24, the historical figure, what would be the Epack as % of total sales of let's say Ipavo?
So FY24, there was hardly any purchase from Ipavo. So in terms of motor buying itself, if we envision, I think we would be targeting anywhere between 40 to 50% of Epack's motor buying from Ipavo. Let's put it this way.
Okay, sure. So that's pretty helpful. So and on the our AC business, how do you see the first quarter has been really great. So how do you see the industry panning in next 3 quarters? As we understand, the inventory with the trade is at literally bare minimum level. So how do you see the next 3 quarters panning out? That's second question. And the last question from my side is, how do we see the business potential in the other small appliances that we are doing? Because this year itself we had started Voltas air coolers. So any update on that, and in general on the small appliances? So what has been the growth in the business? Yeah, that's it from my side. Thanks.
Okay, thank you, Anil. So yeah, now, see, especially the AC business, which contributes currently to almost 86% plus of our revenue, this has been an exceptional quarter year. But the best thing is, even currently, the market is carrying the lowest amount of inventory. The inventories in the market are bare minimum, so the forecast for next 2 quarters, or our order book for next 2 quarters is also extremely healthy. So in that sense, we are sitting in a very right position with right capacities and right mix of inventories to cater to the market for next two quarters. And at the same time, Anil, I'd also like to highlight that a lot of concerns around insourcing, which were raised last time or last year by most of the analysts and yourself, those have now been subdued, and people realize that industry is actually sitting on a lower seasonal capacity, which is required. And then looking at the market potential and growth, which is forecasted over the next 3 to 4 years, I mean, we are poised to outgrow the market growth. So maybe this year the market is estimated to grow at least 25% plus on complete year basis, whereas Epack is definitely going to outgrow the market growth. On the business potential for small domestic appliances, a lot of small domestic appliances are also getting added, and at the same time, the traction and the incentives given by the government in the budget for disposable income to improve consumer durables buying, I think these all are going to help these festivity sales for the small domestic appliances especially. And we have again a very healthy order book for our current products, as well as the newer ones which we are adding, like air fryers and coolers, like you said, which we have already added with one customer. So going forward, we are again expanding customer base for coolers, and then especially washing machine, which we are targeting to start by the beginning of third quarter. So we already are in advanced discussions with most of the esteemed clients, and we see a very positive attraction there as well. So all this put together, the whole idea is to strengthen our Q2 and Q3 earnings and thereby balance our quarters, I mean each of the 4 quarters.
Okay, sure, sir. This is very helpful, and once again, congrats for great set of numbers.
Thank you.
Thank you. The next question is from the line of Abhisar Jain from Monarch AIF. Please go ahead.
Thank you, sir, and congratulations for a very strong top-line growth on both year-on-year as well as quarter-on-quarter basis. I think the traction that you have seen in the AC business is quite heartening. Sir, my question is on the margin front. While we have maintained margins on a year-on-year basis, but sequentially, there is a drop in margins on both gross margin and EBITDA margin basis, despite a very strong top-line growth and very strong season that we had this time. So just wanted to understand that have we, a little bit invested in the fixed asset base because we had the Sri City plant coming in, or whether there have been a little bit lower margin orders that we have executed, and hence, how do you see the margin outlook for the whole year and going forward?
Thanks, Abhisar. So yes, on margin front, we have been flattish Q1Q basis, but if you are comparing it with Q4 of last financial year, definitely we see a little dip in the material margin as well as the EBITDA margin. So this is attributed to the operationalization of Sri City, wherein now there is an increase in an absolute amount increase in the manpower cost and the operations cost. Definitely that is contributing slightly to it, but more than that, the margins have taken a slight hit on account of the commodities, which saw a significant upward trend in April, May, June. So that is something which hit us slightly, but at the same time, since we are in a business wherein the commodities get passed on in the next quarter, so we will see the impact of commodities now settling down in Q2 and Q3 onwards. So it's a recurring effect which gets settled in the next quarter.
Sure, sir. And hence, sir, the full year outlook for the margins will be in what band, according to you? Would we be able to maintain the last year full year level?
That is what I think I also said in my last earnings call. Yes, this is what the management aspires to, and we are pretty confident we will be able to maintain the margin at similar levels.
Sure, sir. Sir, one question on Sri City. I know the plant has got commissioned very recently in the last 2 quarters, but at what utilization it is currently running, and what is the outlook on the orders from the customer, since we have set up such a big facility there?
So Abhisar, on Free City, which got operationalized in December only, so last 6 months we have been able to slowly ramp up the production, and current utilization levels would be anywhere between 40 to 50%, being the first year. But at the same time now, the newer lines like the washing machine, we are setting up in Free City itself, so that would be a product expansion at Free City. And the order book now onwards, so a lot of orders for our pan-India customers which are targeting towards South are getting transferred to Free City. So in a phased manner, we will see the utilizations getting ramped up over the next 12 months. So we are pretty sure that next year, same quarter, we'll be able to utilize 80-90% of Free City investments.
Right, sir. Ajay, you had also talked about reducing the concentration of the top 5 customers in the AC business. And of course, last year we saw a setup of a lot of in-house capacities by a lot of big players, something which is now, I think, settling down. So how is the top 5 share and how is the effort in getting more customers on board in the AC business, if you can throw some light on it?
Yeah. So this is on customer concentration. From FY23 to FY24 and now there has been a significant improvement. Previously we had 3 customers contributing to more than 70% of the sales. Then FY24 we saw almost 5 customers contributing to 70% of the sales. Now we have almost 8 customers contributing to 80% of the sales. So we see a significant improvement in the customer mix and concentration. So this is one area we are definitely working on, and going forward with the expansion of the product portfolio and component business, we see a lot of rationalization happening on that front.
Understood, sir. Okay, just last question on the new products. So the pipeline looks really exciting with many of those products, and you told washing machine you should start in Q3. So sir, what is the overall idea in terms of the percentage share that the non-AC products should have in our portfolio in the next 2 to 3 years time, and how much visibility do you have on that percentage in terms of your dialogues with your customers at this point of time?
Currently, the AC, the room AC segment contributes almost 56% plus of our revenue, and small domestic appliances to almost close to 15%. So going forward, we have categorized washing machine, coolers, and the new products as large home appliances. So large home appliances we see contributing at least 8 to 10% in next 3 to 4 years. And AC, despite growing at the market plus outgrowing the market growth, we will see AC concentration coming down from 86% to maybe less than 70%.
Understood, sir. Understood. Thank you so much, sir, and best wishes. I'll come back in the queue.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your question to 2 per participant. If you have a follow-up question, please come back in the queue. The next question is from the line of Yash from Stallion Assets. Please go ahead.
Hi, thank you for the opportunity. So I just wanted to understand, as you said that you estimate the industry to grow by 25% this year, right? And given the fact that we have low inventory levels right now for AC as well, so you think we can significantly outgrow the number? You think we can grow 40-50% in revenues this year? Or what's your internal sort of target?
Yeah, yes, definitely that's the outlook we are looking at, and the previous earnings call also we have made the similar indication. So at Epack we are definitely looking at 45% plus growth for this financial year as compared to last year.
Okay. Thank you. Thanks. That's it.
Thank you. The next question is from the line of Bhumika Nair from DAM Capital. Please go ahead.
Yeah, hi, good morning, sir, and congratulations on a good set of numbers. Sir, my first question is on the AC segment. We've done quite well, and industry is also kind of supported. How would have been our mix between components and the finished goods, if some color can be given on that aspect?
Thank you, Bhumika. See, Q1 is predominantly an AC season. So AC definitely, if we look at the Q1 standalone result, it will be close to 88%. Whereas small domestic appliances start picking up from Q2, Q3 onwards. So on an annualized basis, we say that it is almost 82 or 83, 84% for AC. So yeah, for Q1, AC contributes almost 88%, but at the same time, like you rightly said, components is something which is picking up very well. So in value terms, component business is was almost insignificant last year. We see definitely improvement in, so even if it grows by 200%, in value terms, it remains very low. But over the next 3 to 4 years, this component business is going to contribute significantly. So currently, in value terms, it is very small, although it has grown by maybe 200%.
Okay. So the other thing was on this acquisition for the motor business. Now, you spoke about, getting into other areas of, BLDC for fans, etc. Now, including RAC and fans, etc., do they have all the customer approvals in place right now?
Yes. So we have already been doing from our test pallet setup currently in Silvassa. We have already started supplies in the last quarter. So last 3 to 4 months, we have done pallet lot supplies to almost all the customers, and we have received extremely good acceptance from the market. And so the market acceptance is received, the product approval is done for both air-con motors as well as BLDC fan motors. So this is why we are now investing in a full-fledged plant. And also there is a PLI which is applicable for the power as well.
Okay. So, we have RAC customers on which they're selling outside of us. They will be selling to Epack, and they also have their own RAC customers to that extent with their...
Absolutely. It's a component business, yes.
Okay. And we acquired 25%. Now the RR Wires still continues to hold another 50%. Is there any thought process to kind of, further do some more acquisition and, kind of make that a 100% subsidiary over a period of time? Or is it that we will be capping it at 50%? Or any thoughts on, where do we want to eventually take the stake to over a period of 4-5 years?
See, Bhumika, this is a very strategic investment, and both the groups, Epack as well as RRWL, are strong enough to grow this business on a standalone basis. So we see a good opportunity to scale up this business to a standalone entity going forward. So there is no intention to go beyond 50% from either side right now. It's more of a strategic investment from both sides where we see opportunities to grow together.
Sure. So the second aspect is on the washing machine business where we are entering. Are there any anchor customers? How do you see the volume scaling up as we move ahead, say in FY26, 27, given the fact that there is enough competitive intensity in this business?
Bhumika, it is extremely important for me to tell that we have very strategically placed ourselves in the washing machine by launching only fully automatic top-load washing machines phase 1. So with this, we saw a lot of capability gap between the existing OEMs and the customer requirements. So we have got very good attraction from almost all the top-tier customers for top-load automatic washing machines which we are launching. And currently with almost 3 to 4 of them, we are at a final closure stage wherein the machines are being tested and validated by them, and commercial closes has been done. So on the top load fully automatic, what we started developing, we are on track to start supplies from the beginning of Q3. At the same time, with this discussion, it has also helped us now to gain customers' confidence to get into a discussion for semi-automatic machines. So for us, semi-automatic washing machine is something which will be follow-through product. With the automatic, we are already now entering most of the marquee customers' requirement for this product, and especially with this investment coming in South, we see a lot of capability gap and capacities which exist in the market. So it is a very strategic investment again, wherein almost all the brand customers have given a lot of positive outlook and confidence to us. Sure, sir.
And the last question is on the interest cost, which kind of saw increase both on YOY and the QOQ basis. So if you can just talk about, if there's been any increase in the working capital, what are our debt levels versus the FY24 levels, etc.?
On interest cost side, yes, there has been an increase as compared to the previous quarter, the Q4 of the last year. So it's more because of, one, we had substantially almost 77% increase in revenues, and so that's one primary reason which has led to this. It is the increased revenue on a quarterly basis which is attributing to this. At the same time, let me also highlight that the working capital days have actually reduced from 45 days in Q4 to 41 days in this quarter. So there is a reduction in the working capital days. The absolute value increase is only a reflection of the revenue.
So if Rajesh can give the debt numbers at the end of the quarter, it will be useful.